Hello friends, I welcome all of you to this CA Final AFM concept capsule series. Today we are going to discuss two important concepts from the chapter Forex exposure and risk management. See, we will try to understand how to read a Forex quotation. So first we will understand, what is a direct quote and indirect quote. Then we will try to understand what is bid rate and offer rate. Shall we see? Assume you are in India. You are assume exporter or importer, you have forex exposure, and in the currency market there is a quotation given for $1 is equal to 80 INR. $1 is equal to 80 INR. Now, what do you mean by direct quote? A direct quote is a quote given for a foreign currency in so many units of home currency, which means a quote for 1 unit of foreign currency in so many units of home currency. Now see, you are in India, correct? Now, for you, what is the foreign currency here? Dollar is the foreign currency. Assume $1 or 1 pound or 1 yen, like this. If a quote is given for foreign currency, which means here 80 INR, how to read this quotation? $1 is equal to 80 INR. How I read this quotation? 80 rupees per dollar. This is how I read this quotation, which means per dollar for every 1 unit of foreign currency. For you, these are all foreign currency so 1 unit of foreign currency in so many units of home currency. Just understand, I'll give you an example. See, you are going to a vegetable market, correct? What will be the commodity trading there? Vegetables, correct? So which means you go there and you ask, 1 kg of tomato is how much? Like this, you will ask, assume 40 rupees. Are you all understanding? Which means in the vegetable market, the vegetable becomes a commodity, correct? In foreign market, foreign exchange market, if you see the currency market, what is the commodity there? The foreign currency itself is a commodity. Are you listening? Which means dollar, pound, euro, like this, the foreign currency becomes a commodity, which means 1 unit of this commodity in so many unit of your currency. The INR is your currency, your home currency. A quote given for a foreign currency in so many units of home currency is called as a direct quote. Are you all understanding? Now, sometimes I will give you an example. Now we will try to understand what is indirect quote. Assume, you go to the same vegetable shop. Instead of tomato or some onion, you ask for green chili. Can you ask 1 kg of green chili? No. What you will do? I have 10 rupees in hand. Can you give me equivalent green chili, whatever it is, right? You will ask like this, So, which means if you say, I have 10 rupees and give me equivalent dollar. Are you all understanding? So, which means 1 rupee, is equal to $0.0125. Assume this is the quote given in India. Again, the country is important where you are, right? The domicile is important. If you are in India, then this quote for INR, this is dollar per INR. How to read this? This is nothing but US dollar per INR. Are you all understanding? Which means $0.0125 per INR. If this is the quote given in India, this is nothing but 1 unit of INR in so many units of foreign currency. This is indirect quote. Are you all understanding the difference between direct quote and indirect quote? Now we will try to understand what is bid rate and offer rate. See, very simple. First you need to understand how the currency market operates, forex market operates. See, just like the vegetable market, you have say Coimbatore market, in Chennai there is a top market, correct? There is tier 1 market, which is a wholesale market. Assume it is a wholesale market. Then there is a tier 2 market. Assume you are living in a particular place. There is also vegetable market available. Agreed? Then there is a tier 3 market, local market, street market. Assume there also vegetable will be sold. Now the point is, here if you see, the 1 kg of tomato is assume 10 rupees, correct? Now if you see in the second tier market, there will be the same 1 kg of tomato will be costing you 15 rupees, and in the okay, localized market, it will be costing you say 20 rupees. Are you all understanding? Which means if you see there are okay layers of market available. This person is also dealer, he is also dealer, he is also dealer. Are you all understanding? This is how currency market will also operate. In this case, assume you are going to the third tier market and you ask for a quote. Okay, he says $1 is equal to 80 okay dash 82 80 hyphen 82. He says $1 is equal to 80 hyphen 82. Now this is the rate given for a dollar. Like this you go to dealer and he gives this quote. Are you all understanding? This is first you need to ascertain whether this is direct quote or indirect quote. Now if this is the quote given in India, this is a direct quote na? Yes, in India foreign currency quotation is given. This is a direct quote. Now this 80 is called as bid rate. This 80 is called as bid rate and this 82 is called as offer rate. This 82 is called as offer rate or ask rate. Are you all listening? Okay. Now see what is happening. Now what is this bid rate? Sir, why two rates are given na? The 2 rupees in between will be the margin for the dealer. Are you all listening? Which means this is the quote given by the dealer. This is the rate at which the 80 is the rate at which the dealer will buy foreign currency from you. Are you all listening? The quotation should be understood from the perspective of the dealer. Are you all listening? Which means if you want, if a customer wants to sell dollar, if a customer wants to sell dollar, who will be selling dollar? Exporter will be selling dollar. Why? Because exporter will have dollar receivable. Tomorrow he is going to, today he is exporting. Assume 3 months is the period, okay, and after 3 months he is going to realize the dollars. Are you listening? Now after 3 months he will receive dollar na, the customer, exporter customer, correct? Where he will go? He will ultimately sell the dollar and realize money in INR, correct? Now when he goes to foreign exchange market, okay, he will sell the dollar na. Now what do you say? He has assumed $1 lakh na. The dealer, what he will say? Okay, give me your dollar, I will give you rupees, I will give you 80 per dollar. Are you all understanding? 80 rupees I will give you for every dollar you give me. So which means when I buy the dollar from you and give the rupees, this from the dealer's perspective, I will give you at the rate of 80. So this is nothing but dealer's buying rate. Dealer's buying rate. Sir, what is this? What he is buying or selling? Foreign currency. Are you all understanding? Whenever I am saying buying, selling, it should be always understood foreign currency. A dealer will buy the dollar from you at the rate of 80. Are you all listening? 80 rupees. Now, what is this 82? Dealer's selling rupees. Dealer's selling rate, which means the dealer if wants to sell the dollar. Assume there is an importer customer who wants to settle his import payable. Import payable he wants to settle. Now after a few months he will go to the forex market and he will sell his rupees and get the dollar. Now here only important thing, the customer after 3 months will buy the dollar or sell the dollar or buy the dollar, correct? If customer wants to buy the dollar, now the dealer will sell the dollar. If dealer sells the dollar, at what rate he will sell? At offer rate. At 82 he will sell. This is nothing but dealer's selling rate. Are you listening? Now, this can also be understood like this. The dealer's buying rate will become customer's selling rate. Customer's selling rate. And the dealer's selling rate will be customer's buying rate. Okay? Are you all understanding? Provided all this is true, provided the quote is in India for a foreign currency, which means the quote is direct quote. If the quote is direct quote, okay, this will hold good. If the quote is indirect quote, okay, very simple. Indirect quote is a quote for INR and not for dollar. Hence, okay, the offer rate of the direct quote becomes bid rate of the indirect quote, and bid rate of the direct quote becomes offer rate of the indirect quote. Are you listening? Why? Because the currency changes, which means if you, this is C, this is $1 is equal to 80, 82. If you do this 1 INR, is equal to, is not 1 by 80 hyphen 1 by 82. This is wrong. Okay, you should write like this: 1 by 82, 1 by 80. How much is the decimal amount? You just calculate. 1 divided by 82 comes to, okay, 0.0122, and this one 1 by 80, okay, comes to 0.0125. Are you all understanding? Which means if you write this in terms of decimal, you should write like this: 0.0122. This is the bid rate. Why? Because this is indirect quote. For INR, this is the bid rate and this is the offer rate. Are you all understanding? Simple understanding of the bid rate and offer rate. Offer rate is also called as ask rate. Okay, it might also be given as ask rate, right? Okay, thank you.